Hey traders, welcome back to my channel. Major fundamental update just hit the tech sector last night, causing Nasdaq to crash by over 500 points. From AI valuations fear to tonight huge Micron earnings, here are the core fundamentals driving the market.
Welcome to this explainer on the anatomy of a massive tech sell-off. If you've been watching the screens today, you know the atmosphere is absolutely electric right now. Fast-paced and honestly pretty tense. We are looking at a brutal tech rout that just slammed into Wall Street, shaking up portfolios and completely flipping the narrative almost overnight. I mean, billions in market cap just vanished in the blink of an eye. We're going to break down exactly what happened, why it's happening, and map out the landscape of this huge global tech meltdown. There's a lot of critical information you need to digest before you make your next move in the markets, so let's get right into it.
Okay, let's dive into this. Negative 500 points. The tech-heavy Nasdaq didn't just take a little breather today, it practically crashed. A sudden massive loss of 500 points in a single session is a serious shock to the system. It's the kind of velocity that wipes out billions in market value in just hours, instantly flipping market sentiment from greedy to downright fearful. It leaves traders frantically scrambling to catch falling knives. When you see a structural break of this magnitude, it fundamentally alters the immediate trading landscape.
To put that point drop into perspective, the final damage for the session was a steep 2.21% drop, dragging the index down to 25,587. This isn't just a minor fluctuation, and it's definitely not your standard healthy pullback. This is a heavy, decisive move downward. This is the gravity of the situation traders are waking up to today. Understanding this baseline is absolutely essential before you even think about deploying new capital. Broad-based selling like this usually screams institutional distribution, meaning the really big players out there are actively slashing their risk exposure.
Moving into Section 1, AI and semiconductors, the real epicenter of this sell-off.
Now, what's really interesting about this slide is the intense psychological battle we're seeing play out in real time. On one side, you've got severe profit-taking. Investors who've been riding this massive, euphoric wave of artificial intelligence and semiconductor stocks are finally cashing out to protect their windfalls, which makes sense, right? But on the other side, the selling is being driven by something much darker, genuine fear. The FOMO, that fear of missing out, has quickly mutated into a tear that AI valuations have inflated into an absolute bubble. So we've got this violent tug-of-war going on between locking in gains and the terrifying thought that the floor is about to fall completely out from underneath the entire sector.
Just look at the collateral damage across the semiconductor space. We aren't talking about speculative small-cap companies here. These are the global chip leaders, the literal engines of the AI revolution, and they are tumbling. Nvidia slipped over 4%. Then you have AMD and SanDisk crashing by a brutal 8%. And it wasn't just them either. Other giants like Qualcomm also took massive hits in this single trading session, shedding anywhere between 4 to 8% of their value. When the generals of the market fall this hard, the pain is broad and it is deep. It really points to a systemic de-risking event rather than just a few isolated corporate failures.
Which brings us to Section 2, the immediate trigger, focusing on Micron Technology earnings.
Negative 13%. I mean, wow, that is just a staggering number. And remember, this wasn't the drop after an earnings report. This was Micron's stock tumble from yesterday, completely ahead of the results. This highlights an extreme, almost panicked level of fear and anticipation. Investors were so terrified of what Micron might report that they aggressively dumped the stock before a single number was even released. It's a classic shoot first, ask questions later market reaction. When institutional investors are unwilling to even hold through the print, it tells you exactly how incredibly fragile the underlying market sentiment has become.
So the crucial point is that the stakes for this earnings report could not possibly be higher. Memory chips are largely viewed as the canary in the coal mine for broader tech demand. If Micron's numbers miss expectations, it's going to validate all those AI bubble fears we just talked about. It could trigger an even deeper, way more aggressive Nasdaq sell-off today. Traders really need to treat this specific event as a massive, immediate threat to the market stability. A miss here doesn't just hurt Micron, it recalibrates the growth models for the entire artificial intelligence supply chain.
Let's zoom out a bit for Section 3, Fed rates and inflation, which are our macro headwinds.
Because look, the battle to fight inflation, it is far from over. Thanks to some stubbornly sticky inflation data, there's a growing expectation that the Federal Reserve is going to be forced to keep interest rates higher for a lot longer than the market wanted. And high interest rates are fundamentally toxic to high-growth tech shares. Tech valuations are largely based on future earnings, right? And mathematically speaking, when interest rates are high, the present value of all those future earnings drops significantly. So these macro pressures are actively crushing the very foundation that tech stocks have been standing on. Capital simply becomes way too expensive to justify these sky-high multiples, and that forces a brutal re-rating across the whole sector.
All right, on to Section 4, crucial market data ahead, mapping the volatility.
Think of this as your literal roadmap for the week's volatility. Tomorrow, the market's going to get hit with US GDP numbers and unemployment claims. And honestly, those data points alone could easily swing the indices. But the real heavyweight, that comes on Friday with the absolutely crucial core PCE inflation data. As you might know, this is famously the Fed's preferred inflation gauge. If this number comes in hot, it all but guarantees those anticipated rate cuts are totally off the table. With all this high-impact data dropping back-to-back, you have to expect massive volatility in the Nasdaq. Keep your risk very tight, and be sure to watch your key technical support levels incredibly closely over the next few days.
So, we wrap up this explainer with the billion-dollar question. Is this just severe profit-taking? A healthy, albeit painful pullback in a historically hot market? Or are we actually witnessing the popping of the AI bubble? It's a provocative question, and one every trader needs to ponder deeply as they navigate these wild price swings and plan their next trade. The macro headwinds are colliding perfectly with extreme tech valuations right now, and it's creating a highly volatile environment. Thank you so much for joining me for this analysis. Please make sure to subscribe to our YouTube channel, Investor's Edge, and go ahead and like the video.